Hi there, welcome to Markets Tomorrow. I'm Neeraj Shah.
Hi everyone, I'm Avan Dabash. Let's start off the show by introducing you to our experts who will be joining in today. UR Bhatt, MD at Dalton Capital Advisors, will be with us, and Ashwini Gujral, Fund Manager at ashwinigujral.com. Ashwini, with you first, and to dwell really on the point that Neeraj flagged off, that 6150, that's at least managed to sustain. Do you see this, this level getting breached in the past, in the coming days, or do you think that we'll manage to hold up?
Well, that it's managed to hold up is not a great positive, because the overall market is extremely range bound. Now, you can get into nitty gritty and, you can have levels every 50 points. The bigger deal is that this attempt at breaking 6150 seems to be failing, which means it's possible that we again have a rally up to 6250 and then we try again to go through 6150. So this sort of up and down will continue, and breaking of certain levels for one day and not coming back the next day, it's all pretty confusing. So it's best to be with individual stocks. On the index, however, the strategy that we are going to take is that we wait for some sort of a rally, 2, 3, 4 day rally, however tepid, and then wait to go short at higher levels around 6240, 6250 on the back of some good news if it comes through, and then wait for the market to break 6150. The risk of shorting at 6150 is that market does not fall and moves 100 points against you. On the Bank Nifty, the move against you could be 300 points. So that has to be taken on board. Overall market does look weak, but the momentum is extremely slow, as we've seen from the FII figures, etc. It's 80-100 crores. You can't move markets with that kind of money. So maybe just look at individual stocks for the moment.
Mr. Bhatt, now unlike earlier beliefs that everyone was talking about scaling those levels of 7,000 on the Nifty in the run-up to the elections, do you think it would be fair to assume that with the political developments unfolding as they are as of now, perhaps 6450 will now be the ceiling for the index?
Looks like that, because when people were talking of 7,000, it looked like as if we are headed for a change in government and a strong government with a strong leader. That was the base case. But today the base case is dramatically different after the Delhi elections, and we have probably a more fractured mandate than what market had bargained for. So that being the case, especially the Aam Aadmi Party, nobody really knows what their economic policies are. They are generally seen as anti-corporate, anti-business. So therefore, I think there's a lot of uncertainty emanating out of this. And so therefore, as you said, 6450 could be considered as some sort of a peak for the run-up to the election.
So, but who's buying the mid-cap stocks? Because retail not present, foreigners don't go down the ladder typically, and DIs have hardly seen any inflows.
I think it is largely the HNI sort of investors who are doing some concentrated buying on mid caps. The retail investor is really not there, and domestic institutions, as you said, have only been seeing outflows on the equity in the equity segment. So I think it is domestic HNIs who think that the good days are going to come again post elections. They are sort of lapping up good quality mid cap stocks. That is what it looks like.
Ashwini, let's nail it down to individual stocks in terms of recommendations. Jayaprakash Associates quite weak in today's session. What would you do with the stock at 48.5 levels?
See, again, it's one of those categories where these are the laggards of the market basically. So downside is probably restricted to 35, 36, upside possibly around 60. So I don't think this is an outperforming group in the market. So overall, I don't think I would like to trade the stock.
Ashwini, I think the highlight today was the way some of the IT stocks behaved in the session, and there were a handful of them which did well ahead of the Infi numbers. We'll talk about Infi in a bit, but what about a couple of other large caps, say for example an HCL Tech, which pretty much closed at the highs of the day?
Well, HCL Tech was sideways for the last 10 odd sessions, and today, it opened lower and throughout the day kept on moving higher and closed at all-time highs of the day. Now that happening without any significant news means that certain institutions and others who probably know about the results are trying to buy into the stock. So chances are that it's now heading much higher, maybe towards even 1380, 1400. And we've seen that often results of even large cap IT companies are not consistent. One company comes with bad results, others come with good results. So, this is a good hint, because in this country, nothing gets announced. It's always known to some people, and chances are those people have moved today.
Yeah, and giving this one company was Acesa Sterlite. You had ONGC, BPCL, which were some of the very active stocks on the large cap end of the market. Run us through, Ashwini, what your recommendation is for Acesa Sterlite.
I really don't like the stock, although it keeps giving you those 4-5% moves. The problem is that it's unable to move forward. So while, for last 5 days it was looking weak, today it makes that sharp move, maybe based on some news or information. But overall, it's not really breaking through key levels. That will happen only once we get consistently past, say, about 210. Only then would you, like to get long on Acesa Sterlite for a sustained move, a move that could, even get towards maybe 250, 260. But for the moment, you'd like to be with stocks which are already making new highs and are then, buying into those corrections.
Ashwini, it was a fairly quiet move for Infosys ahead of the numbers. We've been talking about a lot of trepidation with respect to the exits and the muted volume growth, etc. How would you be approaching the stock ahead of its numbers?
See, the way to look at this is that the overall the sector is in a sweet spot, and chances are that if it's in a sweet spot, unless there's a very outside type of an event where Infosys is the outlier, odds are that most companies will kind of deliver on expectations. So, with a stop around, say, 3350, 3400, it's possible that given the correction in the stock over the last 3 days, it could end up, over a period of time, closer to 3900, 4000, may not be immediately. But I think it's not going in with any sort of euphoria, or the trend remains up, and in an uptrend you keep buying, corrections without having, any views on which way the news is going to play out.
Okay, which is a fair call. Mind you, the Q3 numbers will come in pre-market hours tomorrow, so the Infi will react on opening. What's expected is that the company will show a 2.5% uptick in dollar revenues, which will be around $2117 million. In rupee terms, they'll be flattish, 13,000 odd crores versus 12,965, so not too much on the rupee terms for sure in terms of growth. Profit 2685 versus 2407, so expect an 11.5% uptick from Infosys, from the side of Infosys. So let's see what that stock has to show in the session. The other important set of numbers will be coming out from IndusInd Bank. Look at the NII up 26%, PAT will be growing at around 23 odd percent, and that's broadly what's expected. And banking will be in focus also because of the fact that the IP numbers come out post-market hours tomorrow, so that will keep the markets excited. The 18-hour poll, of course, suggests that the IP is estimated at 1.1% versus a contraction of 1.8% in October. Mr. Butt, come in on the banking pack, and what do you expect? The fact that the PSU banks are not well managed and asset quality is a concern, and NPAs would remain high, because one would argue that that is old news. Markets never react to old news. That's a template in the price. I mean, if the economy recovers, things could only get better for them.
No, there is certainly old news, but there is still quite a lot of hope that things are really at the bottom, and that the worst of the asset quality concerns are behind us. Increasingly, we find that proposition is not coming out to be true. So therefore, even though it looks like it is generically an old piece of news, but still I think there is further sort of muck coming out of the woodworks in this sector. So therefore, I think it would be naive for us to say that everything is fine and hereafter it can be only one way up. Plus also the fact that most of these banks have to raise capital, and they are at at substantially below book value. They are trading at substantially below book value, and so therefore the pressure on raising further capital, whether from the market or from the government, is going to ensure that there is not so much of due interest in the secondary market for these stocks.
And in fact, staying with that pack and also focusing in on all of those banking names, particularly an IndusInd Bank, NIMs are likely to moderate by close to 10 to 15 basis points. The asset quality for IndusInd, that's likely to be fairly stable on a sequential basis, and you can see the loan growth, which will be above industry at close to 20 to 22%. Ashwini, the stock ended lower by 1.2%. What's the call on IndusInd Bank at 416?
See, like tech stocks have some sort of tailwind on the upside, it appears financials have some sort of a tailwind on the downside. So that being the case, unless again, there is huge outperformance, I don't think the stock is going to move up. It's faced consistent resistance at this 460, 480 zone, and chances are, a mild kind of result could lead to somewhat of a disappointment where it falls below 400. Right now 400, 460 is this zone where the stock is moving, but not showing too much strength.
Mr. Bhatt, let's talk about the space that has been in focus. Pharma, all of these names like Aurobindo, Biocon, Reddy's, they've been doing fairly well. Do you see further headroom because of the defensive tilt of the market and also the fundamentals that all of these companies are running on?
The fundamentals are quite sound in most of these companies, and that is where most money has been made in 2013. Also the fact is that quite a lot of institutional money is sitting on these stocks. So therefore, if there is going to be some sort of a lull on the foreign institutional front in terms of investing in India, or even a reversal of their earlier inflows, I think these are sectors that could get affected. But be that as it may, pending that, I think these are sort of stocks people will continue to like, because there's nothing really much that is coming out of the economy which suggests that the economy sensitive sectors are going to do very well in any time in the near future.
Also, Mr. Bhatt, can you run us through what the scenario exactly is looking like over the next 3 to 4 months? I mean, there could be perhaps a 10% downside, and then the tilt of the market would remain defensive with a one-off bout in cap goods, trading, cap goods, infrastructure, etc. Do you agree?
Well, I think that is what it will look like as the confusion continues on the political front, and the real effect of tapering starts showing up in terms of the behavior of FII inflows. So I think the market would probably remain subdued and probably touch 6,000 sometime in the near future.
Planning some of the stocks that you need to keep on your radar. We'll start off with what exactly the dealing rooms are advising. Yatin joins in with a list. Yatin.
Well, Cadila Health is something that dealers have been looking at. Yesterday we had Bank of America, which had increased the target price and upgraded the stock with a target price of nearly 1,000. Today the company had disclosed to the stock exchanges that they have got approval for the Cymbalta generic and also one other drug in which they will be enjoying 180-day exclusivity. Dealers do believe that given the fact that the company had not received approvals since almost 1.5 years now, the approvals have started coming in, and these are all blockbuster approvals that the market was watching for. So this is something that they are looking at from the re-rating angle, and they're expecting a short-term 10 to 15% up move. Also, Heritage Food is something that you need to watch out for. We have seen some M&A coming in the dairy as well as the FMCG sector, with $250 million getting invested by a foreign company into Tirumalai Milks. Now, Heritage Food is also a similar kind of a company wherein they are into various FMCG products, including dairy business. Dealers are anticipating that the company is available almost at 8 times based on FY15 earnings, and possibly on the valuation front, this is something that you need to watch out for. And also, strong free cash flows are expected from the existing dairy business, which would be, put up for brand expansion as well as servicing other FMCG verticals. So this is one stock wherein dealers are buying based on fundamental cues.
We'll watch out for these. I'm sure people will have taken note of that. Yatin, many thanks for joining us and getting us those updates. So a couple of stocks to watch out for. Actually, I want to get in Ashwini to speak about a couple of active stocks as well. And Ashwini, I believe one of them forms part of your picks for today. Fill us in on what's your view on Aurobindo Pharma. It's been a strong stock, which is now starting to show chinks in its armor?
See, it had a fresh breakout from levels about 380. That breakout has failed to follow through, and that is where probably a deeper correction may have to come in before the stock can make fresh highs, because generally a 3 to 5 day type of correction happens when once a strong stock is in a strong trend. But this breakout having failed, and this just means that we could get up to 360, 370 before we can have a sustainable up move again, and that's been true for most of these Cromptons and Arvinds and all of these momentum type of stocks, that they have failed to follow through beyond a point.
Okay, that's the call on Aurobindo. Sell with a stop of 398, target 375. Ashwini, what are the other trading recommendations that you have?
Well, on the others, BPCL is a buy with a stop of 320, target of 338, and UCO Bank is a sell with a stop of 79, target of 67.
Does banking look weaker in general, Ashwini? All the PSU banks, you always sell on UCO. What about some of the others? And therefore, consequently, what's the call on the Bank Nifty?
Well, definitely banking is weaker, and just need to look at the chart of State Bank to see how weak banking is. In private sector, Axis Bank is extremely weak. But the problem is that market lacks follow through. So it's not like banking will collapse tomorrow to 10,500. Banking will probably also give you a pullback towards 10,200, 300, and then break conclusively below 11,000. So it's a choppy type of market, but if you have to buy, whenever the markets are strong, you buy into IT. Whenever markets are weak, you sell into banks. So these are this is the two-pronged strategy you need to have.
And Mr. Bhatt, what's your current portfolio strategy? How are you allocating capital? Because you do sound fairly bearish. Are you sitting on cash?
No, if you're managing institutional portfolios, you cannot really sit on too much of cash. So what you do is you invest in the sort of stocks and the sectors that you think are the best hedge against a potential slowdown and increased uncertainty, and then hope to hedge whenever there are some big events which might actually be adverse to your portfolio.